This conference will now be recorded.
So with the summary of adjusting entries, with regular journal entries and even with closing journal entries, you're told or you know what the amount is. No calculation is required. It's just going to the data, making the journal entry. But when we get to adjusting journal entries, that exact amount is not there, and you've always got to do a calculation. There are 4 types of adjusting entries. We're looking at one type today, the typical type, prepaid expenses. Every asset after receivables is a prepaid expense. And given that it's a prepaid expense, eventually it has to work its way from being an asset to going to the income statement as an expense. So you don't buy something and say it's going to last forever. It's going to get, if you're running that business, it's going to eventually expire, wear out, whatever, and it's going to be expensive. It will no longer stay an asset. So it is a prepaid expense. You just pay expense in advance. Eventually, it ends up on the income statement as an expense, and you have to have revenue to justify that expense. We talked about earned revenues the last time. Accrued revenues we mentioned were similar to type 14, where you do the work and earn the money and you're paid later. And with accrued expenses, it's a similar thing. The company has incurred the expense, it's going to pay it later. So you see this chart, it tells you if you got a prepaid expense, the assets are overstated at this point, the expenses are understated. You got the debit and expense, and you got the credit and asset or contra asset. There's going to be a preceding entry and the AJE follows, and that's the same with the unearned revenues. Are there any questions about what I just said? Everybody understands that. Well, I may better give you all a quiz today since you all also got all this stuff down.
Now, can you repeat it one more time?
Please, sir.
Okay.
One more time.
Now, your course, everybody is responsible for all 40 journal entries. And of course, at this point, the team that has them is responsible for getting them to me, and then I'll put them in course content. So the team does need to put them in there correctly because I'm not going to check them. I grade them, but the team is responsible for having them in there correct. Okay, so I'm just getting this information out for the problem that we have. And okay. When we have a prepaid expense, such as supplies, so let's talk about supplies, okay? And we go back up to our original example on supplies. So you got the examples of each type. So let's talk about it again, prepaid expenses. Most assets are prepaid expenses. So we put them in the asset account, but they're actually an expense eventually, and they're just temporarily prepaid then they become an expense. Okay. So when we pay for the item in advance, we debit the asset and credit cash or accounts payable. But when we get ready to prepare financial statements, we have to check to see if the item is still an asset. So let's look at supplies. Suppose we buy some supplies, paper, pen, things like that. We buy $5,000 worth of supplies paying cash. So we have a type 7. We bought the asset, we debit the supplies and credited cash. Any question on that? Now we come to the end of the period. We could make an entry every day, but we don't want to do that in terms of utilizing resources. And so we come to the end of the period, and even though we bought 5,000 worth of supplies, we now only have 2,000. The essence of this is if in your bank account you have $5,000 at the start of the period and 2,000 at the end, how much did you spend? That's essentially what we're saying. You have 5,000 in your account at the beginning, 2,000 at the end. So the adjusting entry is the difference, is what you spent. So what is supposed to happen today is that the preceding entry is made. We debit supplies and we credit cash. And then we make the adjusting entry, that difference, debiting supplies expense and crediting supplies. And then the T accounts are posted, so we sit a little bit better. 5,000 was in this asset account. It is no longer an asset, all of it, $3,000 of it. So we make the adjusting entry, and of course we posted it now. We're going to debit supplies expense and credit supplies, because we only have $2,000. This is the only thing that should show up on the balance sheet. $3,000 is going to be on the income statement, and we're going to eventually close this account out in the closing process with closing entry number what?
3.
Wrong guess.
2.
Closing entry 2.
Yeah, that's what I meant to say. You know what
Doctor, then we had that conversation about.
Yes, you're right. I don't know why I said 3, but you know I meant 2. We have a mutual understanding. You know I meant 2.
Okay. So when we do the balance sheet, 2,000 in supplies will appear. And when we do the income statement, there will be a supplies expense of $3,000. You must have your accounts in order on that trial balance. And with your accounts in order, you don't move your accounts around. Once you draw that line under dividends, only items under dividends go on the income statement. So you don't jump up here to the balance sheet where supplies is and put that on the income statement. So some people were doing that, or they were getting prepaid insurance. And that's why I told you to draw the line and don't put anything on the income statement unless it's below the line. So let's make sure we do that.
So you said we don't put supplies on the income statement because it's not.
No, okay. It's an asset. Supplies is an asset. When we use it, it's an expense, and whatever is used goes on there. So the 5,000 is 2 parts. 2,000 of it is still an asset. 3,000 is an expense. That's a good question, Dawkins. You're helping people out. So supplies, so it's going to be 2 places. At first, it was one place, an asset. After the adjusting entry, it's two places. The amount that is still there as an asset is going to be on the balance sheet. What's utilized is on the income statement. And then the next year, some more is on there. Any additional question, thoughts, or comments about this adjusting entry? Can everybody make this adjusting entry if I gave you this information?
I feel like I could.
So I just have one
Wait, this
question.
not like I could.
When you put the adjusting entry on a supply T account, like, do you have to label it adjusting entry like you have it labeled here? Or is that just like informational right now because it's
It's
new?
kind of informational purposes, but it's not bad to do that. So you kind of know what's happening. So it's
Like,
information, doesn't have to be there, but from a teaching purpose, yeah.
can I like color code it or something? Because I don't like stuff being too wordy. It's, yeah.
Whatever
Okay.
works for you in terms of how you want to do it. But you see, really, the journal entry is the key, and then this is a posting. So if it's here in the journal entry, okay. So you don't have to have it here. You can call however you want to do it. However helps you so you can do it. So you'll be able to do it on Tuesday with the attendance quiz. So everybody can handle this on the attendance quiz on Tuesday. Is there anybody who can handle it on the attendance quiz on Tuesday? So we know now that we're going to have an adjusting entry for supplies on Tuesday on the attendance quiz.
Is the attendance quiz going to also be like, or is it just specifically on adjusting entries, or is it going to be like journal entries and then list one or two of them?
Well, just for you, since you asked, there'll be one theory question. So you all can begin to look at theory. One theory multiple choice, and a couple adjusting entries. Okay?
Okay.
Now, what's going to be expected is that when you get the information, I'll kind of, I have the journal sheets there, and you make journal entries, just like we're doing now. And you post them to the ledger to show your understanding. So we did 1 and 2 Dawkins last time, right?
We just did one.
Sure.
Positive.
Okay, so in 1, then begin to tell me what happened in 1.
So in one, we said that first we were gonna debit supplies at 25,000 for the preceding entry, and then we were gonna credit accounts payable for the preceding entry at 25,000. Then we were gonna make the adjusted
Slow down. What was it, accounts payable cash?
accounts payable because it's on account. I remember Kayla corrected me the last time because I thought it was cash too. So yeah.
Okay, so that would be what type?
7. I mean, not.
Is that a 12?
Yes, that's why I was just about to look up my sheet.
You're supposed to have your sheet there handy.
I have
Always.
it now. I was trying to pull it up. But yeah, so we're the next one.
Dawkins,
What? What?
have a hard copy of your,
I'm gonna get a hard copy.
get a hard copy of your journal entry types and that chart of accounts, and make sure everybody on your team have it, okay?
I will.
Because you're still only getting a couple of minutes to do these adjusting entries, so you got to be set. So
Right.
we put the 25,000 in here. So this is
Right.
what I'm expecting you to do.
Okay. So after you do that, you still
And
with
what's
me?
the next thing we see?
So it says that at the end of the year, they total to 5,000. So you have to record the adjusting journal entries for the year end. So that means that they've spent at least $20,000 as a supplies expense. So the two accounts that are going to be listed are supplies expense and supplies, and they're going to be equal to 20,000. So supplies expense is going to be debited at 20,000, and the regular supplies account is going to be credited at 20,000.
So when you see this, what's on hand is never the adjusting entry unless it just comes out that way. So every
Right.
now and then students want to say, okay, this is the adjusting entry. No, this is the number you use to calculate the adjusting entry. Okay, so make sure it's not 5,000,
Right.
unless this is 10 or something. So just want to make that clear. So it's the difference, 20,000. So we're going to come to the journal entry, debit supplies, 20,000. Excuse me, supplies expense, and we're going to credit supplies 20,000. And of course, we want to do the postings so they kind of help us. So we had 25,000. And then once we make the adjusting entry, we have a credit here of 20,000. And we would debit what? The supplies expense 20,000. I'll go down here, 20,000. Okay, and so you're seeing that this is coming in here because what? Once you put it in here, you'll have a closing entry eventually to close it out. Okay. So, and these accounts go from year to year, 2017, 2018, 2019. So the supplies account keeps running with a balance. And so the balance in the supplies account right now is what? 5,000.
5,000.
Any question by anyone on this? Any
Yes, I
question?
have a question. I do.
Yes.
So I understand, the gist of this, like how to figure out the adjusting entries and the balances and stuff. But my problem, like my confusion, is when I was like, when me and my team were doing this assignment with the 1 through 10. Some of these entries, like the thing was posting them, like how you have it listed 2017, 2018, 2019, and the
Mm-hmm.
total debits and stuff. Like I didn't know specifically how to make that account, so I was doing it like separate T accounts, like how you have supplies its own account and then supplies expense. Like I wasn't sure because in the book I was trying to look for an example of how to post it, but it was showing me like separate, like each example was its own separate question, so I didn't know
So one,
how I would post them and separate it.
so that's why we have this problem, and you wouldn't do it separately. You would keep the same account. And so what should be happening now, when we finish 2017, the account has 5,000 going into 2018. Okay? It has 5,000
Okay.
going into 2018. And the supplies expense has nothing going into 2018. See that? Maybe I need 2017 in there somewhere. Because we have, let's see, 27. So let me put 2017 in here. Sales 2017. So let me put 2017 in here. there. Let me just change this to 2017. That's going to be the easiest way to do it. And I'll make this 2018. Okay. So no, you keep the accounts going. And so one of the things you learn is that when we get ready to 2018, there's nothing in the expense account. There is an amount in the asset account. There's nothing in the expense account. Any question? Okay. Try to adjust your schedules also time-wise. We may be running down to about 12:30 in the future, starting today. So we probably be running down a little bit lower with our time, since you're the dedicated professor. Okay, let's go to 2018. What's happening here, Dawkins?
Okay, so in 2018, it says that the company purchased supplies paying cash at $15,000. So your first transaction is going to be supplies and cash.
Right, so I guess we changed this to cash. And this was 20,000, correct?
15, I think it said.
Okay. So now we have a purchase of 15,000, and this is now going to be what?
A 7.
7. What else is going to happen? Didn't you have another purchase?
Yes, it says you will purchase 20,000, an additional $20,000 in supplies on account. So it's going to be supplies and accounts payable at 20,000.
Okay. So we'll take this out. Okay. So at this point, as we move into 2018, we're going to bring down the balance from the prior period. Okay. Just like if this is your bank statement, you would, when you go to 2021, you will move your balance from the prior year down. Now we're going to post the 15,000 and 20,000, the current transactions in the account. So the 15,000 and the 20,000. So how much do we have available now?
35,000. Oh, you mean how much is left? 10,000. 10,000 was left on hand.
Well, let's just, okay, so in making the entry, to get ready to make that adjusting entry, we're going to do a subtotal in here.
Okay.
And so what's that subtotal amount going to be at this point?
40,000.
Okay, 40,000. So we got 40,000 in the account, 5 from the prior year, 15 and 20 for a total of 40,000. When we go to the problem, it tells us what?
That there's
Supply
10,000 left.
$10,000. So what you know is that I got 40 in here. Put it in red. But the balance in the account is $10,000. So the balance in the account is $10,000. So what do I need to do?
Find the adjusted entry. So it's 40,000 minus 10,000,
Okay.
which is 30,000.
So we know the balance must be 10. So 30,000 then becomes the amount of the
Can
adjusting
you
entry.
explain this balance 10,000 one more time, please?
We took an inventory of supplies on hand. It was 10,000. So that's always on supplies on hand. That's always given to you. On hand. On hand. You always have to have that information in the problem. So in our second year, in 2018, we have 10,000 on hand. And so the adjusting entry is 30,000. So we're going to come up here in this year, 30,000, comma, 0, 0, 0. And now we got to post this entry. And so we have it 2018. Now we go to supplies expense for 2018, and we put in $30,000.
Are those lines going through the numbers by accident, or
No,
is it
those are closing entries that would be made.
okay?
So you get to 2018, that expense has nothing in it. So no, the lines are there to tell you that, okay, when you get to 2019, we get 2018, you don't have anything in the expense account. All expense accounts are closed out at the end of the year. So it was, okay, so 30,000 is the adjusting entry. That's the entry we make. And then we're gonna come in here and put 30,000 in here in the closing entry eventually to close out 2018. Okay. So Dawkins,
Yes,
let's
sir.
let's assume that we stay with this problem and we go on to 2019. So we're going on to 2019. So we're changing a little bit so we can stay with the same data.
Hey,
Okay.
real quick, Professor Boyd, I guess the reason why I asked that is because I had skimmed through. I didn't like read them all, but I skimmed through the study problems and I was like, there's more entries for 2017. So I'm like, how are we closing it out if we still have to put more stuff in it later?
Wait a minute. Say that again.
Like, you know how I asked you like why you had the numbers crossed out?
Mm-hmm.
Well, assuming that group 1 or group 2 actually do all 10 problems, there's more entries that have to be made in 2017, right?
Right. That's what I'm saying.
No.
That's why I'm confused.
That's all like, how are we closing out an account that we have more
No,
entries
gotta
for?
read. Gotta read. Rental car company. Rental car company. Shoe company. Shoe company.
Oh,
Publishing company.
oh,
Okay.
wow. Okay. That's why I said I skimmed through. I didn't even read them all. Probably should have
Okay.
actually read it.
All right. So we changed. So the companies change up. So they're kind of in twos. So that's a good point. So
Oh, okay.
you see it goes from a rental car company to a shoe company, then to a publishing company. So this is
Cool.
probably should be publishing. No, this is no, we're going to something else. So yeah, that's how they were done. So there were two for the shoe company, rental car company, and two for the shoe company, and then two for the publishing company. So those are different companies. But good point. Any question on where we are so far?
Okay, I understand that a little more, but I have a question about number 6, because I mean, I know we're not there yet, and we're taking it one by one, but I was a little like confused on like what it was really asking, because there was no like there was no adjusting amount. Like, you know how normally you'd say, oh, well, this is the amount that we have left, and you would give us an initial like number for the supplies. I don't know. It was just like a required amount. That's why I was kind of like confused.
Okay, well, let's save that one till we get there then.
Okay.
Okay, so they're sort of in twos. Okay, so let's go to the shoe company now. So we're no longer dealing with this company. The car run company. So all of the stuff comes out. We done with that example. So in typically, we just sort of do it in 2 years, just to, so let you see what happens the next year. But you don't have to worry about the third year. Okay, so let's go to problem 3. What happened in problem 3?
It says that their purchase supplies on account costing 15,000. So the account would be supplies and accounts payable at 15,000. Mm-hmm.
Any question on that entry? That's the what preceding entry. Then what happened?
They only had $5,000 left, so that means that they would have spent 10,000, which would have made the adjusting entry supplies expense debited at 10,000 and supplies credited at 10,000.
So when we post those,
Mm-hmm.
2017, 15,000 here. Then we have the adjusting entry, 10,000. So that gives us a balance in the account of 5,000. Then when we go to the expense account for 2017, we're gonna have what, the 10,000 in there. And we would eventually close it out because we close it out year by year. So that's 2017. What happens in 2018?
In 2018, they purchased supplies paying cash in the amount of 5,000 and purchased an additional 10,000. So, of supplies on account. So it's going to be supplies and cash.
So we got, so let's
At
take these
5,000.
as we move to another year. And how much did you purchase on account?
10,000.
So once we have this situation of multiple purchases and a beginning balance of 5,000, so coming in at 2018, we got that beginning balance that's going to roll in there for 5,000. Then we got to bring in the 5 and the 10,000. The 5 that we purchased and the 10,000 that we purchased. So that's going to tell us at this point in the account how much is in the account.
20,000.
So there's 20,000 in the account at this point. And it tells us on hand we have what?
10,000. I mean, wait. Oh, 4,000. Sorry.
You got 4,000 on hand.
So that means that the adjusted entry should be 16,000.
Are you asking me or telling me?
No, I'm telling you.
Okay. Does everyone see how we got 16,000? Anybody don't see how we got 16,000? We simply add our beginning balance, our cash purchase, and our purchase on account in 2018. So we had 20,000. 4,000 is in the account, so that difference, 16,000, is the AJE. And it's going to go into the expense account for 2018. And then we would eventually close it out. So we put it in there. And so this is just to let you know, when you get to 2019, you don't have anything in the expense account. Okay? That's all we're trying to show. Any other questions on supplies? So the publishing company is similar. You purchase supplies paying cash in the amount of 6, got an additional 4 on account. Record the interest, assume you got 3. So if I look at this, what's my adjusting entry going to be? So we don't have to go in. So this is the publishing company, new company. What's the adjusting entry going to be?
7,000. Right.
You asking me or telling me?
I'm telling you, because 6,000 and 4,000 is 10,000, and then we only have 3,000 left. So 10 minus 7 is 3. I mean, sorry, 10 minus 3 is 7,000.
I think something was left out of 6. Okay, so we'll forget
See,
about it.
I knew I wasn't tripping because I was really having a hard time.
Well, you should have assumed something was left out. There was no beginning purchase. Well, that's good.
Right.
But what's the answer now?
2.
Okay, so if we didn't buy any more supplies, and if this were 1,000 on hand, then the difference would be 2. So it could work one way or the other, probably in terms of the 0 probably shouldn't have been there.
Oh, okay. So then how would you record it? Like, would you go to the supplies T account and then put it in like that, or do you just like leave it alone because we don't have like the purchase
You
the
wouldn't have purchased, you would only have the adjusting entry. So you would not have anything up here. You'd only have the adjusting entry.
And I got a question too. When we're doing these, like you see how you have the journal account up there like that, like where we would put the preceding entries and stuff. Since there are like 10 questions, are we putting it all on one chart, like one big chart like that, or are we separating them? Because that's how I did. I separated them, and then like
They're
did
individual
the
problems. They're
okay,
virtual individual problems. So you
okay,
just be one, you have the journal entries that relate to one. Then you have the journal entry. So I was erasing the second year, but if I gave you 2 years, you'd have 2017 1, which is 2017. These are the journal entries. 2, 2018. These are the journal entries and the postings. Okay. Okay. Let's move on to number 7. On April 1, JHJ Shoe Company purchased a 12-month insurance policy for $1,200. Record the entry to record the purchase on April 1, and the adjusting entry required a December 31. So we're moving now to prepaid insurance. So take all these out. And so now we're going to have insurance expense and prepaid insurance. So the setup is virtually was kind of similar. So we may need to make this prepaid insurance. These amounts out. Okay, so $12-month insurance policy on April 1st for $1,200. So the first thing we're going to do is record the purchase, $1,200. And most times they won't cash for insurance. Okay. Then it asks you for the adjusting entry required at the end of the year. And this was an April 1st date, APR1. Okay. So with supplies, we use supplies. So as we use the supplies, we expense them. With the prepaid insurance, it's going to expire in time. If you got a car and you got insurance on it, when you first pay for the insurance, it's prepaid. But what? Month by month, that insurance is going to expire. So if we're at April 1st documents, how many months are going to expire?
Until you said up until December, right? That's 8 months.
Who else on your team? Anybody else on that team? We don't want documents if we don't want to get an A. Do I have to pull out my roster for this team and start calling on people? Well, I put a -1. Nobody else spoke. -1 for the team today.
No, because somebody else trying to log on right now. Hold up, like don't do us like that yet.
It should have said something. Are they pretending not to know anything or something? I thought y'all knew these.
We did, and actually, they're better on the prepaid insurance ones because like half everybody did like.
Since you're incorrect on it,
I'm not incorrect. Let me not say that. But I did the ones on supplies, but I do know like some of the prepaid insurance ones too. I can still like contribute. I know.
Okay. So as we work with
But
prepaid insurance, if we buy a 12-month policy for $1,200, then it's expiring at the rate of what?
$100 a month.
$100 a month. And how many months are there from April 1st to December 31st?
8 months, right? It's 8 months. April, May, June, July, August, September, October, November, December. 8 months.
Yes, this is 8 months.
Let me see. April, May, June, that's 3 months. July, August, September, that's
It's
6 months.
9.
October, November, December, 9 months.
It's 9. Yeah.
So
It's 9 months. Hold up. It's because it's December
I feel like it's
31st.
eight
Is
months.
that
I
why?
feel like I just sat here and
Cause it's
counted.
still. I thought it was still 8 months. Cause it's still December.
how many months is it from January 1st till well, let's do it this way. Suppose you leased an apartment on April 1st. How many months of rent you got to pay? If you lease
Oh
that,
yeah, you're right. You're right. Yeah, definitely going through that right now. Thanks for speaking the language. I understand. Whoop.
now you understand. Yeah, they want that. They want that rent for April too. Unless you got a 1 month free, they want the rent. So it's 9 months, Dawkins.
Okay, I got you.
You yield, Dawkins.
Yes.
And don't be like Trump now. So, so we would debit insurance expense and credit prepaid. So all we did was we had a 1-year policy. We divided 12 into 1,200, and so the insurance was being paid at a rate of $100 a month. It was expiring at the rate of $100 a month. So when you got to December, 900 of it was gone. So let's see how that looks. Prepaid insurance starts off at $1,200. Okay. And we make an adjusted entry for 900. So at the end of the month, end of the year, we got 300. We go to the insurance expense now account. And we're going to put the 900 here. And eventually we're going to close it out. So hopefully that doesn't throw you off any, that it scratches it out, but it's just letting you know, okay, once this expense is gone, that's how expenses are, you know. You pay the money, you use it, it's gone. So nothing is going to carry over. So you should not be carrying over. You know, when I tell you to go from 1 year to the next, you should not be carrying over expense accounts, okay? They all closed out.
In the future, would it make more sense to close accounts out after you do the closing entries? Because doing it right now confuses me.
Okay.
So that would make so put the entries in there, but I wouldn't close or draw a line through it until I actually do all of my closing entries, correct?
Yeah.
Okay.
We sure it's something else, but that's a good point. So works like this. That works okay?
Yeah.
Okay. Now let's see what happens now in this problem. When we go to 2018, the shoe company renews this insurance, but the cost is now $1,500. So when it gets to the next year, it's gonna debit prepaid insurance for $1,500, and it's gonna credit cash. So this is the next year. So when we get ready to make that adjusting entry for the next year, how much is it going to be? They got it. So this is April 1st of 2017, and now we're into 2018. So this is April 1.
So it changed to 125 a month instead of 100 a month.
Right. Mm-hmm.
We're in 2018. So how much is our adjusting entry going to be?
For the same 9 months?
No.
It's 8 months. No, wait, hold up. Go. Can you scroll down to the question again? I just wanted to look at the month. This is number 8, right? So it's gonna be, yeah, it says April 1st, then April 1st to December 31st. Oh wait, no, but then it says January 2018. So I thought it would be 9 months.
Let me ask you this. If you got a cell phone and if you pay $100 a month from April 1, 2017 to 2018, then in 2018, when April runs around, they up it to $1,500 a year. How much you gonna pay in 2018?
Well, you will pay. Hold up. You will pay 3 months. It was $100 each for the first 3 months, and then 125 each for the last 9 months.
So when we get into 2018, we got the 300. Okay. So I'll put it over here on the credit side now. In January, February, and March, those 3 months, you're paying
100 each.
100 each. But now the 1,500 comes into play. And now you got to start paying what?
125.
125.
You got to pay. So you paid 100 for the first 3 months. Now we got to pay 125. How many months?
9.
6 or 9? Oh, 9. 6. No?
If you had a cell phone and you paid 3 months at 100, and if you paid just 6 more months, what would happen to your cell phone service?
It's gonna get cut off after.
Oh. Oh.
You only paid
All right.
you paid 3 months at 100. You paid 6 months at 125. What's going to happen to your cell phone?
It's gonna get cut off.
So you got to pay 125 for you were saying it earlier for 9 months.
Right, because you're paying it for the full year instead of like the last time it's just being like 9 months.
Right.
Okay. Because I
So
forgot
that's
that these
about
two that they
14.
come in twos, right? Like each question they come in two. So this is like related to the last question. That's what I'm still trying to figure it out. But I got
Well, that's what you're trying to figure it out. 120. So this would be 1125. So if you multiply that out, 9 times 125, you'd be paying 1125 for those last months. So when we get ready to make the adjusting entry now, it's going to be 1125 to 125 for 9 months plus this 300. And so that's going to be what? 1425? So that's what you all had, Dawkins?
Yes. Yes.
Okay. So once again, we have the insurance expiring. We got the insurance expiring monthly. You pay for it in advance. It expires monthly. You pay it again here. It's expiring monthly at 1125. So how much we gonna have in the account now at the end of 2018? How much you gonna be carrying over to 2019?
Wait, hold up, 375. Wait, no, 120. Yeah, 375. Yeah.
So you got 3 months. You got 3 months to carry over. So if you think about your cell phone a little bit or something like that, you get the sense of
Oh,
what
sir,
the,
I have 15,000 for that. Is this supposed to be 1,500
probably
for
1500.
for the balance up there?
So 1425. This oh here, yeah, this is 1500.
Yes.
Okay. So maybe you're seeing now why I just said we'll work on those other entries that you could just go look at and do. Then I come back to adjusting entries. Maybe you see now a little bit. Okay, I'm tired of Dawkins today. Let's go on to team. No, it's really good, but I want to make sure somebody besides Dawkins is learning and Williams is learning something today. And I can't tell you learn anything if you don't say anything. And eventually you have to come back to me. Y'all want insurance on your attendance quiz on Tuesday?
Woo, no. Can we have supplies? Can we please just do supply? I mean, like, I'm cool with insurance, but can we just please supplies? Like, we love the supplies.
I need somebody that's top besides Dawkins.
I'm talking. I agree with that.
Heck. Okay. All right. So let's come down to our favorite, buying these automobiles. So when we buy autos in any long-term asset, it's still a prepaid asset that is going to expire with time. So we have JHJ Rental Car buying 5 autos for $20,000 and paying $50,000 down. So can I have a journal entry for that?
Okay, so it's gonna be the preceded entry will be auto for 100,000 and cash. Well, it's debited for 100,000 and cash credited for 50,000, and it's gonna be notes payable for 50,000 credited, and it's a type 7 and 12. And the adjusting each entry would be depreciation expense for 25,000 debited.
Okay. So, well, before we do that, let's go in here. See if we can put the auto here. And the auto has a debit of what?
100,000. Mm-hmm.
Okay, so we got the auto, got depreciation. Let's see. I guess we're gonna have accumulated depreciation now, right?
Right.
Accumulated depreciation. Then I need to copy this. Because what other kind of account do I need?
Depreciation expense.
Okay, so we need a depreciation expense. So once we get to depreciation for long-lived assets, we have 3 accounts now. The asset itself, the accumulated depreciation,
Hmm.
so with depreciation, we simply are looking at the expiring over time. So let's, okay, so what's my type for depreciation expense? And I have a special number for it, Coleman.
It's type 14.
Okay. So the asset itself costs $100,000. It has a life of how many years, Holman?
4.
4 years. So just like that insurance was expiring monthly, this is expiring annually at the rate of $25,000 a month. So we're going to come in here. Let's take these out. And we're going to debit depreciation expense. For 25,000. What's my, well, I don't worry about the account number at this point. And we're going to credit what?
Accumulated depreciation auto.
So let's look at what's going to happen. We're going to always keep $100,000 in here, okay?
Mm-hmm.
For the accumulated depreciation, when we credit it, we have 25,000 in it. So we will always know the asset cost 100, but we took 25,000 in depreciation on it. And then for the expense that comes in here at 25,000 for 2017. And if I was doing a balance sheet presentation, Holman, how would that look?
So it'll be auto debited at 100,000.
So we'd have auto in here on the balance sheet. Well, we put it in here, 100,000. Then we'd have what?
The less accumulated depreciation debited at 25,000.
You were going well till you said debit.
Oh, credited, sorry.
So it's going to have a credit balance of 25,000 in that account. And so when we show that auto on the balance sheet, it's going to be net auto. And the auto is going to be on the balance sheet at what amount, Holman?
75,000.
75,000. Any questions? Okay, well, Holman, let's move on to the next year. So this is all in here. This is 2017. So what happened in 2018, Holman?
2018. JHA car rental owned the cars purchased.
So you still got, what you gonna do?
So you put the preceding entry, which is the auto for 100,000 debited, and then I put cash for debited.
You own a car? You own a car, Holman?
Do I own a car?
Mm-hmm.
Yes.
Do you buy it every year?
No.
So why you have your business buy the car again? You already got the car.
I thought I had to put the preceding again.
Do you buy your car every year?
No.
So your business is not gonna buy the car every year either. It still has it. So in the account is 100,000. You're gonna bring it down. There's 100,000 still.
Right.
Okay. Okay. Now we got to make an adjusting entry.
Okay, so the depreciation expense will be 25,000 debited.
You asking me or telling me?
I'm telling you.
Okay. And what else?
Then the accumulated will be credited at 25,000.
So the entry is going to be the same thing.
Right.
So the first year is 25, blah, blah, blah. Second year, same thing. Let's go into the postings. So we aren't doing anything with the auto. So in 2018, we're going to put another 25,000 in accumulated depreciation. Why is that? Okay. So now the balance in accumulated depreciation is how much?
50,000.
50,000. And depreciation, we would have closed those out now. But in 2018, we're going to have what? 25,000.
25,000.
So once you buy the asset with these adjusting entries, it's going to stay the same each year. So in the simplified case, in this situation, every year you would make this entry. Now let's look at that balance sheet presentation in 2018. What's that gonna look like, Holden?
Okay, so the auto 100,000 debited.
Still gonna be there at 100,000 debit.
The less depreciation expense is credited.
Not expense.
Auto, I'm sorry.
Not auto. Less accumulated
Accumulated expense.
depreciation. What kind of account is accumulated depreciation, Holman? How much gonna be in the account now?
50,000.
50,000. So if you look at your chart of accounts, what kind of account is accumulated depreciation?
I'm looking for it.
Looking for it. You bad as docket.
14.
Oh no, he didn't just do me like that. I could, man.
14.
14.
I didn't ask y'all that. I asked you what kind of an account it was. On that chart of accounts, what kind of account is accumulated depreciation? Do you see it?
130.
That's a number. I don't know if that's a number or not. Oh, let me look in.
Hold on.
Oh, what? So if I look in the primer, I see accumulated depreciation on Onto's account number 211. Does anybody else see that?
Yes, I see it now.
So, and it's under long-term asset, but what's the normal balance for accumulated depreciation? What's the normal balance going to be? In case I give you a listing of account balances and tell you to prepare a trial balance. What balance is accumulated depreciation going to have? What does it say? Accumulated depreciation, normal balance, credit.
50,000.
Well, I'll just ask for the normal balance now. So it has a balance of 50,000. Then the next year, there's a balance is going to be what? Accumulated depreciation will be 75,000. And then you'd have the net octo would then be, put this down a little bit. So the octo just keeps going down in value, just like your car keeps going down in value every year. Unless you. Okay. Okay. So, in effect, this is one of the easier adjusting entries. Once you record the purchase, you don't do any more recording of the purchase. The AJE stays the same each year. The balance sheet presentation that changes. So that should not be too hard for you all to work on.
Wait, Professor Boyd, the account that you have for that same problem, when you have auto and cash, what's the third one? Because it says 50,000 under it on the journal entry. Is it like intentionally supposed to be blank, or is it like?
No, I just didn't write it. What should I have?
Okay.
What should I have written
That's
in?
why I needed probably like notes payable
Holman,
or something.
Blame Holman since she's supposed to tell me everything.
I thought I did.
You told me? What did you tell me?
I told you that it's Depreciate, nope, notes payable.
Okay, so that should have been there. Okay. Thank you, Dawkins.
You're welcome.
Oh.
Always here.
Okay. So these are adjusting entries, and as we work with them, as you can see, nobody tells you the number. You gotta go think and get to that number. Okay. Let's go back and look at adjusting entries 3 and 4. We did earn revenues last time, correct? I'm assuming I
Yeah.
did. Okay, good.
Okay, but Professor Boyd, real quick, since class is almost over, can you please like make it clear what group 3 and 4 have to do? Because people usually like leave on time, and I don't think we all need to be aware of what needs to be done.
They got to do the same thing I was done today and turn it in. Also, I guess my link didn't get in, so I'll put it in. You're doing the same thing, except that I think group 3 will start with unearned revenues, I believe, and some accrued liabilities. And then group 4 has accrued expenses. So accrued revenues, we'll work with it, but it's pretty much like you earn the income you're collecting later. It's like a 15 and a 3. Okay. So you're going to debit some account receivable or accrued receivable or interest receivable and credit the revenue. Then when you collect, you debit the revenue and credit the receivable. So with the accrued revenues, as well as the accrued expenses, the adjusting entry happens, then there is a subsequent entry. So when we're looking at unearned revenue and when we're looking at prepaid expenses, there is a preceding entry. But as you work with the accrued revenue and accrued expenses, there is a succeeding entry, typically involving cash. Once again, as you saw, when we made that adjusting entry, we never had cash in there. So cash can be in the preceding entry. It can be in the subsequent entry, but it is not to be in the adjusting entry. Got it? Okay. So as we move toward office hours, since only Cameron showed up yesterday.
When is your office hours today? Because I'm coming. If you have them today, I'll come. For real. I need to go over some stuff. 1:30? To when? To when?
About 2:30.
Okay.
Because I have a class at 2:40.
Oh, okay.
I got class during your office hours, so I can't be in class and trying to learn accounting too.
Okay. Which office hours do you have an issue with?
All of them. Okay.
You got back-to-back classes.
Yeah. Yeah.
Well, if there's an issue, you just need to let me know. That is, if we need to, I'll do the preliminary one on Monday, but I can always do a later one on Monday. But from 3 to 4:30, I do the accounting 2 office hours. So it'd have to be in that 5 o'clock range. So what y'all need to do is to just let me know if we need a 5 o'clock office hours. You don't have classes then, do you, Ms. Williams?
No, I think my last class ended at 4:15. So.
Okay.
Yeah, same goes.
So what, Zahid?
Same goes for me too. My last class ends at 4:30.
Okay,
It's at
so
4:30.
So most times I'm there from 3 to 5 with the principals too. And so I will come on at 5 o'clock in principals 1 and see if anybody's there.
Okay, I'll do it at 5 to when? You said when? What day?
Those are Monday, Wednesdays.
Okay, I can probably do that too. But I was gonna ask you. So for this, like everybody's 10 questions, is it like everybody turning it in individually or just one designated person?
One person.
Okay, good. I was just double checking because I know some people like, when we see the links, we automatically think that that's a individual assignment that pops up. But I just wanted to make sure so that you
I
won't
just
like
didn't get in, but I
have
put
to.
team on it.
Okay.
What
Okay.
exact numbers do Team 4 have to do?
31 and whatever's after that. So I think it's 31 to 42.
I didn't see a 42. I looked and I thought it stopped at
31
34.
to 40.
Say what?
It was 31 to 40, no?
Well, if it's any more than that, Zahid, do those too.
Yeah, I'm looking right now and it only goes to number 34. I don't have a problem with just doing 4 problems. I was just asking to be sure.
I'll create some.
Well, we're not doing that.
Let me see.
Just want to be on the same page as you because I'll turn in 4 problems and then you'll be.
Oh, you got to keep turning the pages. That calendar,
be
you got
nice.
to learn. You got to use that calendar, Williams.
Oh, it's past the calendar.
It's past
Oh, dang. Thought I was getting away. All right.
You said, dang, like she was really finna do
You
4
should know.
questions.
You should know. Easy. You should know.
Dang, okay. 31 to 42. Got it.
Now you have it. Okay.
You could have stopped at
So
34, but I got it.
let's look at accrued wages right quick for the 5 women. When's y'all next class? When's y'all next
Who?
class?
Mine is, oh, I don't have another class after this.
Well, let me
I
just
have like
talk
a
about
meeting, a team meeting, but I don't have a class specifically on Tuesdays and Thursdays. It's just this one.
it. Okay, so let's look at accrued wages quickly. And like I say, the others, they're not that bad. You can see how they come through. You just have to read them. Accrued wages occur when employees work in a period but are not paid until the next. Assuming the weekly payroll for JHJ Roan Car is $2,500 a week, 5-day week, so the workers are paid $500. The payroll is paid weekly on Friday. So based on the calendar below or above? Okay, here's the calendar. When December rolled around, a full payroll would have been paid on the 27th, but the workers worked the 30th and 31st. So an adjusting entry must be made for these 2 days because the workers have worked and revenue has been earned for those 2 days. So I tell you, first of all, to pay the regular payroll, debit salary expense and credit cash. When December 31st rolls around, because you're paying the workers $500 a day, you got to accrue their wages. You're going to debit salary expense and credit wages payable for $2,000. Excuse me, for $1,000. You've got to do that. So, even though the workers are not paid, they have earned the money and you owe it. So if you don't show this, you don't have the correct expense, you don't have the correct wages. And remember, expenses reduce revenue when you get ready to pay taxes. So you want that, that amount there. So we debit salary expense and credit wages payable. And then this is how it looks. So I got the salary expense in here, the last one you regularly paid. Then I got the accrual in here for the AJE. Now watch this, Ms. Caleb. When the payroll is paid on the first Friday in January, the cash paid will include the $1,000 that was earned the prior year. So when we get into January, it's not on here, and we get ready to pay on that first Friday in January, these 2 days are paid. So the payroll, this will be January 1st, 2nd, 3rd. So when you pay on the 3rd, you're paying for 3 years for the current year, but these 2 years of the old year. So let's see how that looks. You're going to debit wages payable because you got to clear out the accrued wages payable for $1,000. The expense for that next year is only $1,500, and you credit cash for $2,500. When that entry is paid, the accrued wages payable, a subsequent entry is closed out. So we always do that. Then the salary expense of the $2,500 for the next year is only $1,500. So that's the little change there as we work with accrued wages payable. So once again, these are adjusting entries. I delayed them because I'm not telling you the exact amount. I'm having you to calculate that amount. These are journal entries. You're going to post them to the ledger and do the same thing and go on to those other steps later. Any questions? Any comments? Okay, so I will be back on at 12:30 with the accounting 2. I'm at the section 2 number, classroom open, because I normally open that number for them. So I'll be on at 1:30. And so, 1:30, we can then go and review anything you want to look at. Then on Monday, I have the office hours at 1:30. Then I'll check back at 5 also on this class. On Mondays, I'll be using this classroom number. On Wednesdays, I use the other classroom number. So I rotate the numbers. So these are adjusting entries. Let's try to work them and work through them. They're difficult to work sometimes, but closing entries are more important. So I'll tell you that closing entries are more important. So you all have a great adjusting entry weekend. And I'll see some of you all later today, and I'll see others on Monday and others on Tuesday in class. Have a great weekend.
You too, Professor.
All right, see you Tuesday.
Okay.
You